Welcome. In today's quick video, we're just going to review some changes for the jumbo mortgages for 2024 and talk about some of the updated requirements. Homebuyers that have questions, of course, visit us at jumbomortgagesource.com or call us 7 days a week at 800-962-0677. First things we want to understand the differences between a basic standard conforming loan, or a conventional loan as it's known as, and also a jumbo loan. Basically, any loan amount that exceeds the conforming loan limit would be classified as a jumbo mortgage. In this year, for 2024, the conforming loan limits have increased yet again, and for most of the U.S., the standard conforming loan limit is $766,550. This again applies to most of the country except select high cost or high balance locations where the loan limits can go as high as 1.149 million. And we'll look at the map that shows the different high cost locations. Now, these conforming loan limits do increase depending on how many units the property is. For multi-unit 2, 3, 4 unit properties, you can see here on the chart how the limits do increase. So again, this is for basic conforming or conventional loans, and then any amount that exceeds this would be a jumbo mortgage. This is a look at the high cost map where the higher loan limits apply. Again, most of the high cost areas are going to be centered really around California. There's a lot of them. And again, it's not 766,000 up to 1.149 million. There is some in between there. The yellow areas there are probably in between, as you can see, like around Nashville and Tennessee. They're in between that amount. But again, most of the areas around Washington, D.C., that is all high cost locations. Of course, many locations around New York City and then California, there's a lot of high cost counties. It's done strictly by the county, and you can find your county's exact loan limits by visiting the website. We'll have that on there. Okay, for the jumbo loan, the limits for each jumbo program, it really depends on the down payment. So the maximum financing currently is 95% financing. And these loan limits generally for a standard location, not a high cost location, would be around 1.25 million. That can go up to as high as 2 million for, again, high cost locations, maybe like in California, around DC and locations like that. Now, this can and does change throughout the year, so it's always a good idea to refer back to the website to see what the current loan limits are based on your down payment. Okay, now home buyers that are putting down 10%, 15%, or 20% down, the loan limits do increase. So again, with as you can see on the chart here, with 90%, 10% down payment, those loan limits are from $2 up to $3 million, and then so on. Okay, and again, higher loan options are available with greater down payments. Let's look closely at the 5% down option, 95% financing. Again, loan limits can range from 1.25 up to 2 million. Higher, the higher end would be for the high cost or high balance locations that we looked at in the map. Credit scores, generally a 680 credit score is going to be required for any financing up to 95%, and loan amounts that exceed over $1 million, they may require a slightly higher credit score. Documentation, property types, transaction, a lot of this is the same as just any basic conventional loan. But for documentation, borrowers should have complete income and asset documentation. And for your income, that would mean previous 2 years of W-2s and tax returns, or if you're self-employed, of course, just your tax returns. Um, your assets, borrowers would need to document their previous 2 to 3 months of assets, maybe their most recent retirement account statements, whatever's needed to qualify and to show the assets needed to qualify. Of course, if it's not needed, it won't be requested. Property types, they include primary primary homes and vacation homes, second homes. Uh, Second homes generally will require 10% down payment. Investment properties, they're not permitted under this program. Construction to permanent financing, of course, for home buyers that want to build on their own lot. We're not referring to now a spec home that you're buying maybe from a contractor in a plain unit development. That's going to be looked at as any normal purchase. But an actual construction to permanent financing where you have a lot or want to purchase a lot and get your own contractor and build your house on your lot, there are options for that too, up to 90% financing. And this applies to just purchases and regular rate and term refinances. Cash out refinances are not available up to 95%. The available terms are all the common adjustable rate and fixed rate options. They're all fully amortized. There is no negative amortization type programs with this. It's all fully amortized and all your basic fixed rate, 30-year, 15-year fixed rate, and of course 5-year, 7-year, 10-year ARMs. Piggyback combo loan options are available. This is commonly utilized to prevent monthly mortgage insurance for people that are financing over 80% loan to value. Uh, there can be also many other advantages to the piggyback combo loan option depending on your loan amount, but oftentimes people utilize this to avoid the mortgage insurance, monthly mortgage insurance, or PMI as it's known as, but also many times by keeping your first and primary mortgage at or below the conforming loan limit, and then tacking on top of that a smaller second mortgage, subordinate loan. By doing that, oftentimes you can receive lower interest rates on your, especially on your primary first mortgage. So there can be some benefits. And again, what option works best for you? That's going to depend on many variables like your qualifying profile and of course your requested loan amount and your down payment has a lot to do with it. For the 10% down payment, again, these loan amounts go higher, oftentimes over 2 million. And credit scores, the requirements for that relax a little bit because the down payment is higher. So credit scores often in the mid 600s can be done. Higher credit scores, depending on, may be required depending on what your final loan amount is. Documentation, this is all the same, complete income and asset documentation. Uh, Property types, again, include all your regular primary single-family homes, townhomes, select condominiums, second homes, and vacation homes would be included in this, and investment properties are not permitted. There are options for investment property purchases, but they require at least 20% down payment. Transaction types, again, purchase and rate and term refinances, along with cash out refinances. There are cash out refinance options that go up to 90% loan to value. And again, your available terms are going to be all the same. Your common adjustable rate mortgages and fixed rate mortgages fully amortized. And again, combo piggyback options like an 80-10 option is often utilized depending on your loan amount to avoid the monthly mortgage insurance. Documentation and reserve requirements. Again, these are fully documented loans. There are special options for self-employed borrowers, which we'll look at briefly. But again, last 2 years of tax returns and W-2 statements for regularly employed borrowers. If you're just self-employed and you want to do the full doc option, that would just mean tax returns. 3 months generally of liquid asset statements and the most recent quarterly statement for any retirement account as needed for qualifying. Some of the other jumbo loan programs, again, for self-employed borrowers, they do have bank statement qualifying programs available up to 90% loan to value. It's not any secret that a lot of self-employed borrowers may run into obstacles when it comes to documenting their income properly, or going by their tax returns. So oftentimes for self-employed business owners, they can qualify based on their actual business deposits, an average of their business deposits over the course of a year or 2 years. Uh, so this is often used for, again, business owners that may have some obstacles when it comes to documenting income through traditional methods. Vacation and second homes, again, up to 90% loan to value, and again, construction, true construction to permanent financing, up to 90% loan to value. That's the basic changes for this year. Again, if you're a home buyer and you have questions, please reach out to us at jumbomortgagesource.com or call us 7 days a week. Thank you for listening.